gapping up to resistance. This is technical analysis of the stock markets. Update and forecast for Thursday, July 16th, 2020. Hello traders, I'm Richard Graham. We're going to take a look at the S&P 500. Look what just happened. We gapped up into resistance. We've got resistance here that we hit on the 13th, and we've got this upward sloping trend line that we've hit many times in the past. This is actually something that we've broken through and tried to get through, and then we broke through it again, and then we were down. Here we hit it again. This is a major point of resistance, and it's going to be interesting to see if we can get past it. Not only that, we've got this gap here that we did fill, this island reversal pattern that we had back in around the 9th or 10th of June. We had this island reversal pattern, which was bearish, and we've been trying to get up above it ever since then. We filled this gap, but we're sitting at this area where we've hit it once, and then we hit it again. And we still haven't been able to gap up and make past the highs of June 10th and June 8th through there, that area. Now, until we can get past that area, I wouldn't be necessarily bullish on the market. I want to get up past that area and then see if we can't come back and retest this area. Then it would be a safe place to get in. At this point, we're sitting at major resistance. We've hit it 3 times now, and we can't get past it. And so what we might wind up doing is coming back to this trend line here that we hit here on the 12th and the 26th. If we hit it again in the next day or so, or the next week or so, it would be also a good opportunity to get long. Either way, we're going to be in an uptrend. Well, we'll just have to wait and see how it plays out. The Nasdaq, let's take a look at that. A couple of days ago, we had this big sell-off, and now we've had this retracement of about 50% of the move. And we still haven't even been able to get above that retracement. Now, we know that the Nasdaq has actually been leading the market over the past 3 or 4 months, and now it's broken down. Looks like other areas of the market have kind of taken over. If you look at the Dow Jones Industrial average, we see that that's actually taken off to the upside. So we've had somewhat of a rotation from tech into the Dow Jones, it looks like. See how we're above these moving averages, and both moving averages are sloping upwards? We're taking a look at the 30-minute chart. But if we take a look at the daily chart, it's a little bit different picture. The Dow Jones Industrial average still isn't doing as well as the S&P 500 or the tech stocks in the Nasdaq. Here's the tech stocks. Look at that. We're above this high that we had on February 19th. It broke through it around early June, and we have been coming up. We're still in a bullish market here, but you know, I would wait until we get into a more of an area of value until we want to buy this market, because at this point it looks like we're still chasing price. And we had this big down move here on the 13th, and go back to the 30-minute chart. It looks like an impulsive move. And this looks more like a correction that we've had over the last day or so. So until we can reverse the way that looks, this could possibly be bearish, at least in the short term. And this could come down to this area I was just talking about, this upward sloping trend line. So if that's the case, imagine it coming down and hitting that. Wouldn't that be an opportunity to look for a reversal pattern and then possibly get long up into this resistance again? So at this point, I wouldn't want to go short this market. You still want to be long because we're in an overall uptrend, but I still think we need to wait until we get and see a little bit more value, because at this point, it's looking a little bit too risky for me. That's my own opinion. That's the way I trade. This is not trading advice or financial advice. You have to use your own due diligence. Let's take a look at the gold market. Well, before we do that, let's take a look at the dollar. The dollar has been on this downtrend for quite a while now. Look at that. Now, that's usually bullish for stocks. So unless it turns around, we can see that this actually be a bullish move for the stock market. Let's pull back and look at the daily chart. And on the daily chart, we can see that we've been in this, well, this is what happened. We had the big sell-off in March, and the dollar rallied big time. But since then, it's coming back down, and we've got this area of resistance, or I'm sorry, this area of support that we could be hitting in the next few days. And we're hitting support right now. We could be hitting support in the next few days, and then that might be an opportunity to see a turnaround in the stock market to the downside. Usually when the dollar is going down, the stock market's going up, and vice versa. But that's not always the case. I also like to take a look at the VIX. The VIX has been in this big down move ever since we had the sell-off in March, and see how it was inverse to the stock market. When there's fear in the market, the price of options go up, and that causes the VIX to go up. So that's why we call it the fear index. It's been going down ever since. We had this spike up when we had the island reversal around June 10th or so, and now it's back down to where it was back in early June, right around 27. But normally when we're in a bull market, we often see the VIX down around 11, 12, 13, maybe even 15. That's the historical average, and so we're still sitting at an elevated level. Now, if we look at the VIX term structure, it's in contango right now. That's a bullish sign for the stock market. The difference between the first and the second futures price on the VIX is 28.5 and 30.5. And so that's a difference of 7.19%. When longer-term futures in the VIX are priced higher than the shorter-term VIX futures, that's called contango, and that is a bullish signal for the stock market. So at this time, you want to continue to be long, in my opinion, in the stock market, because everything is still bullish and the trend is your friend until it's not. Taking a look at the bond market, this is TLT, the ETF fund that trades the long-term government bonds, and we're still in an uptrend, and we've broken out of this triangle here back on the 25th of June, and we came back and retested the trend line of that triangle, and we're still heading up. So bullish on bonds for now, and if the market does decide to sell off, that should be also bullish for bonds as well. Let's take a look at gold. This has been in an uptrend, and it looks like we might be hitting some sort of resistance on the trend line here. We're just going to have to wait and see on that. But at this time, the trend is your friend in gold, and it continues to go up. This area right here, if we drill down to the 30-minute chart, it looks like we have somewhat of a bull flag that is being created at this time. And if we can break out of this bull flag pattern, we've also got this trend line here that can act as horizontal resistance. But no matter which one you're looking at, if we can get a situation where we break out of it and then come back and retest some area of value, say right around here, that's a good safe area to get in. Set your stop loss slightly below there, and then set a profit target of about the same measured move that we had. So an example might be that, see, we had this measured move that went from here to here, and once we broke out of resistance, actually maybe more like this, and then we could take this same trend line and move it over here and take it here. So we have an instance where we could get in here, wait for a continuation, some type of pattern on a smaller time frame, maybe drill it down to the 15-minute or the 5-minute chart, see what's going on, see if you can identify a double bottom or some type of reversal pattern at this support area. Once it gets down here, look for it to continue. Set your stop down below this line here and see if we can't get it to come up to here, so you can run a trade from here to here and look at that long-term trend line that is going to probably act as some sort of resistance. But at this time, gold is on fire, has been for quite a while now, and it doesn't look like it's turning around anytime soon. So once we get the breakout, look for the retest of that level, and then a chance to get in. Once again, this is just the way I trade. It's not necessarily any type of financial advice, of course. The economic calendar for Thursday, July 16th, core retail sales, initial jobless claims, the Philadelphia Fed Manufacturing Index, and retail sales, all on the same day. Look for possible fireworks and a lot of volatility, folks. Get ready for it. All right, traders, good luck today. If you like these kind of videos, give me a thumbs up and consider subscribing if you haven't already. That way you'll get notified whenever I put out one of these videos. Have a great day.